Inside a massive data center in Northern Virginia, server rack indicators blink through the night, their cooling systems emitting a constant roar. AI training clusters here operate near full capacity, executing trillions of calculations per second. Powering this computing revolution are not just Nvidia's GPUs, but the densely packed high-speed memory modules behind them. High-bandwidth memory, HBM, DRAM, and NAND flash memory form the data superhighway for AI model training. Yet this highway is experiencing unprecedented congestion due to surging demand. This phenomenon signals a deepening structural imbalance in the global memory market. According to a recent Goldman Sachs research report, 2026-2027 will witness the most severe supply shortage in the history of the memory market. This forecast is not based on short-term fluctuations, but on a long-term supply-demand mismatch driven by the AI infrastructure investment boom. While demand for memory chips from traditional markets like consumer electronics is stabilizing or even contracting, AI servers demonstrate exponential growth potential, fundamentally reshaping the resource allocation logic of the entire industry chain. Examining specific categories, DRAM, NAND flash, and HBM all face varying degrees of supply deficit. Goldman Sachs projects the DRAM supply shortage will reach 4.9% in 2026, the worst level in 15 years. When including AI-specific HBM, server-related DRAM demand is expected to skyrocket to 57% of the total by 2027. Concurrently, the NAND market is under similar pressure, with a projected 2026 supply-demand gap of 4.2%, primarily driven by enterprise solid-state drive (SSD) demand, which is anticipated to grow at an annual rate of 58%. Meanwhile, high-bandwidth memory (HBM), a core component for AI chips, is expected to become a $75 billion market by 2027, with its supply shortfall remaining at a high level of 5.1%. It's noteworthy that storage demand from the mobile device and personal computer sectors has stalled. NAND demand for smartphones and PCs is projected to see zero growth in 2026, hitting a historical low. This structural mismatch between the intense hunger of AI servers for high-performance memory and the weakness in traditional consumer markets further intensifies the overall supply pressure. The explosive growth on the demand side stems from AI training's relentless pursuit of computational density. The HBM capacity required per Nvidia GB200 platform node has doubled compared to its predecessor, directly exposing capacity bottlenecks in advanced packaging and stacking technologies. IDC data indicates enterprise SSD demand will grow 58% year-over-year in 2026, with server standard DRAM demand also growing at a rate of 39%. Looking further, the Trump administration's proposal to exempt tariffs on AI chips used in data centers by tech giants like Amazon, Google, and Microsoft, aimed at reducing AI infrastructure deployment costs, could further stimulate capital expenditure expansion. The supply side is constrained by the pace of capacity rollout and technical barriers. While Samsung's P4L fab is scheduled for production in 2026, and SK Hynix's M15X HBM fab is set for mass production by late 2025, effective supply still lags behind the demand ramp-up cycle. Micron Technology's Singapore ID1 fab won't achieve wide-scale production until 2027. Furthermore, the stringent requirements of advanced nodes for power, clean room conditions, and equipment commissioning cycles make it difficult for new production lines to reach full capacity quickly. Capital markets have clearly reflected this. In late January 2026, shares of Seagate Technology, Western Digital, and Micron Technology collectively rose by 19%, 11%, and 6% respectively. However, entering February, stocks of some manufacturers corrected, reflecting a market repricing of short-term speculative sentiment. Notably, corporate strategies are undergoing profound adjustments. Micron Technology is accelerating its pivot toward HBM3E development, while Western Digital is cutting NAND capital expenditure and shifting toward customized enterprise SSD solutions. Contract models are evolving accordingly. Samsung, SK Hynix, and Micron have added post-settlement price adjustment clauses and shortened long-term agreement cycles to quarterly or even monthly terms to manage exposure to risks from severe price volatility. This change marks the industry's evolution from stable long-term agreements toward flexible pricing mechanisms. This supply-demand imbalance may reshape the industry cycle. The CEO of Intel has publicly stated that the memory chip shortage will last at least until 2028. The CEO of Synopsys also believes shortages will persist through 2026 and 2027. Inventory level data further corroborates the tense situation. Memory inventory at Apple and several smartphone manufacturers is generally below 4 weeks, far lower than the safe level of 8 to 10 weeks. Samsung's DRAM inventory has also fallen to approximately 6 weeks of supply. This indicates the current imbalance is not a short-term inventory cycle fluctuation, but a long-term structural reconfiguration triggered by a technological paradigm shift. AI infrastructure build-out cycles typically span 3 to 5 years. Combined with barriers in advanced packaging and material innovation, supply elasticity will be difficult to restore in the short term. It is advisable to focus on companies possessing advanced packaging capabilities and HBM technology, such as Micron Technology and SK Hynix. Exercise caution regarding memory manufacturers reliant on consumer end business and those slow to transform. The medium to long-term re-rating potential of the entire AI infrastructure industry chain appears promising.